In 2023, Eric Fry released a stock teaser where he claimed that if you just invested in something called iFuel, you could earn 10,000% in profit. That's a huge number, but what exactly is iFuel and how much money did it actually make investors? You'll get the answers to these questions plus a lot more by the end of this video. There are actually two stocks that Fry recommended, and I'll reveal the names of each one for free in this video. On top of that, I'll even share information on whether they're a good investment or not. And later in the video, I'll show you exactly how the stocks ended up performing after about a year, so you can decide for yourself if Eric Fry is worth listening to. As it turned out, Eric Fry was hyping up hydrogen, which is what he was referring to when he said iFuel. Fry believes that hydrogen is going to be used a lot in the future as a renewable and clean energy source. Hydrogen offers significant advantages as an energy source due to its versatility, clean nature, abundance, energy storage capability, and high energy density. Hydrogen can be used in various applications, from powering fuel cells in vehicles to generating electricity and heat. Its clean nature, producing only water as a byproduct when used in fuel cells, makes it an attractive option for reducing greenhouse gas emissions. On top of this, hydrogen is the most abundant element in the universe, which means for our purposes, it's basically unlimited in supply. Another advantage of hydrogen is its ability to store energy. Excess electricity generated from renewable sources, such as wind or solar power, can be used to produce hydrogen through electrolysis. This hydrogen can then be stored and utilized later when there is a demand for electricity. This energy storage capability of hydrogen enables better integration of intermittent renewable energy sources, making it a valuable tool in the transition to a more sustainable energy system. But keep in mind, it's not all sunshine and rainbows with hydrogen. Hydrogen has its fair share of challenges despite its potential. For starters, producing hydrogen, especially through water electrolysis, uses a lot of electricity, often from fossil fuels, which undercuts its green advantages. Building the infrastructure for production, storage, and transportation is a massive and costly task. Safety is a big concern too. Hydrogen is highly flammable and must be stored under high pressure, requiring strict safety protocols. The cost of producing green hydrogen is still high, making it less competitive than fossil fuels and other renewables. Plus, making hydrogen from natural gas can still produce significant carbon emissions if not properly managed. These hurdles make it tough to adopt hydrogen widely as a primary energy source. So overall, while hydrogen has many advantages, including its versatility and environmental benefits, it also creates problems that companies need to solve. These include the production and infrastructure requirements, energy efficiency, safety considerations, cost, and the need to transition to low-carbon production methods. Addressing these challenges is crucial to realizing the full potential of hydrogen as an energy source. The two companies that Fry recommended as a play on hydrogen are Total Energies and Plug Power. Total Energies is a huge energy company that's been around for a long time, and it's now investing billions in hydrogen projects. They're using their experience and resources to develop new ways to produce green hydrogen, aiming to become a leader in clean energy. Their focus on hydrogen is part of their plan to reach net zero emissions by 2050. As more countries and industries move towards sustainable energy, Total Energies' investment in hydrogen could make it a smart choice for investors. The company's size, stability, and commitment to innovation give it a strong foundation for growth in the clean energy market. Plug Power is a smaller, more innovative company that specializes in hydrogen fuel cells and electrolyzers, which are used to power things like vehicles and backup power systems. Their technology is at the cutting edge of the hydrogen revolution. While Plug Power is much smaller than companies like Total Energies, it offers a unique investment opportunity with the potential for higher returns. This also means there's more risk involved since the company is not as established. Investors in Plug Power are betting on the company's ability to grow quickly in a market that's looking for cleaner energy solutions. Now let's see how each stock performed about a year after Fry recommended it. If you look at this chart, Total Energies seems to have done decently well, rising from 56 euros in May 2023 to about 63 euros as of July 2024. This is about an 11% gain. But keep in mind that the S&P 500 rose over 32% in that same time frame, so you would have made literally 3 times as much money if you had blindly invested in a simple index fund. So, if you include opportunity cost, what looks like an 11% gain is actually a 22% loss. The second stock performance is much simpler to analyze. Plug Power dropped from $7.48 in 2023 to only $2.48 in 2024. This represents a 66% loss. Eric Fry created a bunch of hype and sold a bunch of newsletters only to screw over his audience with low-quality stock picks that lost a lot of money. So clearly, Eric Fry is full of it, and his stock picks can't be trusted. This shouldn't be a surprise since Fry seems to spend most of his time advertising his newsletter instead of actually doing research. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.